What's good? What's happening, guys? We're back to analyze how deep this downside can go, and more importantly, when is the absolute bottom going to be in? Again, we're not going to be covering my opinion. We're going to get together in a groupthink style research, look over this FOMC data that we've been using to project there'd be April downside and then figure out where to go from there. Using this exact technique, we've been able to put together the best trading plans over the past 90 days. Some of them include, obviously, Render, Tau, River, BankerBot, catching 30x upside. That actually seems to be the magic number. During 2026, Siren was about a 30x upside from the bottom to the top. River, a 30x upside. BankerBot, pretty solid gains there, 4 to 5x. Tau, a flagship project, being able to time this all because it was in an FOMC document. Super important stuff. Without further ado, this is the document that's been signaling downside in April. This is the FOMC minutes that was just released on February 18th. And what it reads is, with RMPs, this means Treasury bills. They're repurchasing Treasury bills at the Fed. That's super bullish, and one of the reasons we are able to put together that trading plan for River, a stablecoin project backed by Treasury bill yield, the reserves, and that's a key word that we've always got to be looking for inside these documents. As I'm going to show you other examples when they're mentioning reserves, just underlining how important this is. Reserves were expected to increase until early April. And then they're going to drop quickly and sharply as tax revenues flow into the TGA. The TGA being the United States government checkbook. And this puppy has a massive impact on altcoins, as we'll show you in a second. There's two sides to a TGA refill. One, you get the refill itself, which causes downside. And then on the flip side of that coin, you get the TGA drawdown, where Scott Bessant pushes almost like a soft QE that's not run by the Fed and their balance sheet. The Treasury general account is 1/10 the size of the big Fed balance sheet everybody's looking at. So we've got to keep in mind that this is a dual catalyst, and we're getting this not from my opinion, not from my history as a trader. We're getting this from a federal document. And just to show you how important this is, I pulled up the October 8th FOMC minutes. Inside our VIP group, we were able to put together, hey guys, we got a problem with the reserves because of this government shutdown. We're going to be able to see some downside in the near future. And you can go back inside these minutes. This is from December of 2024, right after the rate cuts. Everybody on social media, they're going, here we go, it's alt season, Q1 of 2025. And what they're talking about here is because Trump's in office with the US election, because they're going to do tariffs, that's going to pump up the inflation data. Excuse me, let me zoom in more so you guys can see that. Because of the US election, the inflation data and the economic impact, which by now everybody's aware, wait a minute, these tariffs completely wrecked everything. This document was released like December 10th, and using it, we were able to put together trading plans. Hey, we got to get out. We got to sell. This is from December 10th. Let's sell all of our altcoin swing trades that we just did for the rate cuts like Moonwell. And why don't we go ahead and sell our Caspa, which is more of our hodl bags. Anything that we're not locking up for 10 years, let's get in cash. Not only are we getting in cash, we're going to have to sit on our hands for 100 to 120 days. Why? Because of tariff inflation. And that's right in these documents. Because of tariffs. They just did a dot plot vote back then. They just had a dot plot vote recently and they kept it even. And there's a Bank of Japan policy, a Bank of Japan rate hike. Super bearish. That document was released here, and we were projecting at that January 28th meeting, everything would crash. Right here. The downside is going to take place at the January meeting, and sure enough, it did. What we're going to do right now is add up all of these federal documents, take everything into account, and use our logic to determine how deep this downside is going to go. To highlight how important the Treasury General Account refill is, we can see this article in the Milk Road, just going on about when the Treasury General Account refill takes place, this is going to be huge. First, it pulls money out, and I'm going to show you what this document's saying compared to the total three. First, it pulls money out, and that's going to cause the downside. So right here, there was an FOMC meeting. They're like, oh, woo-ha, bullish, super good news. They're going to end quantitative tightening in Q1 of 2026. Markets pivoting to the upside. Remember, there was conflict overseas with Russia and Ukraine impacting oil, impacting inflation. At the same time, there was a lot of ceasefires mysteriously around the bottom of the market here. Here comes the Treasury General Account refill. It causes a rapid drawdown. And that's what we're seeing right now. That's what this document from Milk Road is covering. Here's the upside of it. After they get the money pulled in, and we're going to get into when is it a good time to scoop this up. That's what this video is all about. We're stacking together all this FOMC data, which I just showed you from all these examples. How we're able to put together the sickest, like Chad level to the day, to the dollar callouts because we're using this FOMC minute document. The Fed run the market, and therefore from this, we'll be able to find exactly where the bottom is. And right now, we're just going over how important the TGA refill is. Here's another date, July 12th. That was also an FOMC minutes. In fact, and here's something that we want to keep in mind, and we're going to go over variations too. Both of these upsides, these pivots from the Treasury General Account, not the refill, which is bearish. And we're going to calculate how low this can go. There's a bullish side to that coin as well. And that's from the Treasury General Account drawdown. Right here in Milk Road. They're just going over how this works. I'll actually drop this in the comments. You guys can open it up in a new window just to get an idea of how crucial the Treasury General Account is. Here's an interview with Arthur Hayes back at the previous Treasury General Account, back from this FOMC minutes where it's reading here. This is just a great example of how these work in impacting to altcoins. This was released on October 8th, 48 hours before the market crash. What does it say? Heads up. We just had reserves. That's a keyword. Everybody in our VIP group, they just got the top 10 keywords that we need to pull out of the up and coming April 7th FOMC minutes. This is going to give us huge insight into further downside or immediate rally. And this is how we put together these Chad level callouts, not just on timing, but we're able to correlate it with what sectors of crypto rally. And we'll get into that in a second too. So there's reserve downside because of a TGA refill. Big picture here, we're seeing on politics and on the news, you got every congressperson and they're voting. Hey, how big's the budget going to get? That's all about the Treasury General Account. Therefore, as they add to that, government vote all across mainstream media. Now they throw a government shutdown in. Well, there was a large portion of that Treasury general account refilled. This Treasury general account, because the government's now reopened, is going to be a massive high impact event, both on the downside and the upside. So there we can see the September 15th refill. And look at this, double top. Here comes the FOMC minutes. And then, of course, the Morgan Stanley regulation. That's the 1-2 punch right here that really put altcoins out. Since the February 6th labor market report, we've been seeing this consolidation. It was exactly there. To the day, to the dollar, the labor market print on Friday starts consolidating the altcoin market and Bitcoin. That's when we started uploading these live streams, getting everybody ready for what we anticipated was going to be an AI-specific rally that could reach all of the altcoin market. Because in those FOMC documents, what are they talking about? AI CapEx. AI is starting to take over the economy. Therefore, as liquidity improves, the AI sector naturally grows. We go ahead and we throw some technical analysis on this. We're seeing a double bottom Adam and Eve here. Boom, we're getting a reversal. Along the way, the resistance, the support, correlated with these macroeconomic dates as well. We've got PPI on January 30th, January 14th PPI, actually ping-ponging price around as support and resistance, just underlining how our entire thesis, tracking macroeconomic data, monitoring the Fed closely, all this information that we have recorded and organized is just so important across every time frame. Historically, this downside is going to continue until April 8th. That's when the FOMC minutes document will be released. Now, the Treasury General account that's run by Scott Bessant, they have an option to wait before injecting that liquidity back into the market. And that will set us up for a Bank of Japan carry trade. The Bank of Japan is considering, they haven't said yet in stone that they're going to hike rates, and that definitely can add to downside, but it's not quite as high impact of a catalyst as the Treasury General account refill. Depending on what's inside that April 8th FOMC document, depending on how low we go on Bitcoin, building up to that macro catalyst event, that can undoubtedly be the bottom. That gives Bitcoin enough time to retrace to that 50K level, this giant head and shoulder pattern that everybody can see, average downside equals 50K. Solana has the exact same pattern, and it did its full retrace, which is minus 70%. So Solana's already been wicking down to and bouncing off of those levels. Minus 70% with its head and shoulder. There's three clear peaks here. The buyers are attempting to push the price to a new high here, failing, getting a bit higher on the head, and then the right shoulder is usually always the weaker of these three rallies, and the buyers completely fail. Now the sellers are in control. The buyers are exhausted. They just got gassed out. Everybody was loading up here. They heard, wow, all that Bitcoin ETF stuff actually worked out. Let's go ahead and buy Bitcoin, right? Initial rally. Secondary rally. Now psychologically, they're all gassed out. And this also connects into our FOMC liquidity models. what's really going on with Satoshi's design. Every time I hear a new theory about who Satoshi is, it's always these exotic computer programmers. What everyone's overlooking is how deeply entrenched Bitcoin is with macroeconomics, with the central bank model. Since they decoupled from gold in 1968, this red line shows a 4-year cycle that the central banks use to run their fiat pyramid scheme. The black line shows how well it goes. Obviously, they're doing quantitative easing, rate cuts to push money into the economy, stimulate jobs, and then to fight the inflation that they just created. Meanwhile, the great equalizer is GDP, economic growth. By doing this, they're able to grow the United States rapidly. And that's what this black line represents, because they printed so much money during COVID, during lockdowns. And it was really because of a crisis, not because of big economic growth, like from 1990 to 2000. The last bull run was ultimately pathetic from a quantitative easing level. The top 100 projects were doing a 10x, 20x at best from tip to toe. Previous cycles, they were doing 100, 200, 300. And that's all because the whole time the Fed's pulling liquidity out of the market using quantitative tightening. And all these details inside these documents you can use to put together these Chad level trading plans where we're getting out at market tops, buying back in 120 days later at market lows, waiting for 100 to 120 days, January 27th, the FOMC meeting. It's all connected. And they're giving this information out, not on the news. Most people on social media are just overlooking it. They either don't have the skills, they haven't been trained in economics, but it is starting to gain traction. People are talking about this a lot more now. And what it's looking like, Author Hayes supports this completely too. Oh yeah, key puzzle piece here. During this soft quantitative easing that's been going on, guess what happened? The Fed overprinted. That's inside this document here. Inside this router's post, or it might have been another one, they explicitly go over all the details of the quantitative easing dollar to dollar, what their goals were, and then how much they actually printed. And what ended up happening, oh yeah, here we go, it's down here a little bit lower, was they printed too much money. So we're actually overstocked right now, which is really setting the stage for a nice size rally. Once this Treasury general account rotates, we got a River trader. Yeah, River, very easy to take profit there. This was one of the best trades of the year across all of crypto. And of course, we put this together from reading those FOMC documents, knowing that the Treasury bill purchases was going to make these stablecoin projects rocket. We're able to get half a dozen trading plans for River put together at $3, $4, $5 range, always projecting that they would break out when that FOMC minutes was released. Recently, we've been advising everybody on the main channel, hey guys, what's up? Jump into River, we're going to see some upside. And then there's a token unlock. So inside VIP, we're taking profits, and now we're getting downside, a reset. No, I don't think that they're going to hike rates. What I believe that they're going to do is, instead of adjusting the rate model, they're going to focus on quantitative easing. So the entire concept of cutting rates is to incentivize the institutional level investors to pivot out of their long-term bonds because now the rates are paying less and into risk-on assets. Let's say they suddenly cut rates by 2 points like they did for COVID. That's a huge deduction in the amount they're going to be earning on these long-term bonds. Therefore, they're incentivized to take their money out and put it into Main Street. When they do quantitative easing, they're not incentivizing anything. It's just happening right there, right then. They're actually making the transfers in real time. Incentivizing's gone out the window at that point. What I believe that they're going to do is they're going to focus on quantitative easing, soft quantitative easing, and then eventually long-term bonds. And they're going to keep the rates even to fight inflation. Specifically in April, that's when the anticipated rock bottom low will be in. Once the Treasury general account is done, the bottom is en route right now. Now, there are a few wild card scenarios that could extend the timeline and create some more wax and wane, pushing it a bit lower. But this April Treasury general account refill, supported by these FOMC documents saying in plain English, the reserves are going to drop rapidly. And earlier in this video, we gave tons of examples of reserves falling sharply and how that directly correlates with downside in the market. Ultimately, as a crypto trader, we're a DXY and bond market trader as well, because cryptocurrencies trade inversely to the bond market like a hand in a glove. That would definitely be the case for the AI rallies that we are able to capture, again, from reading those FOMC documents. Everybody inside the VIP, we just got the top 10 keywords for this April 7th FOMC minutes when it's released. A lot of them are regarding liquidity. Artificial intelligence, that's a local keyword that we've been pulling information out of. They're talking about the AI capex, how it's huge. Therefore, as the liquidity is restored, dating all the way back to the September 15th issues, when they were voting on how much is the government going to spend, and then they're like, well, we can't decide, let's shut the government down and make it worse. This is giving AI room to breathe, and a violent reaction from a top 50 project like Tau. In the event you weren't in the VIP group to pick up on this, yeah, now we're in the sideline. We are able to get Tau up under 200 all day, anticipating breakouts, even hitting it with 5x leverage trades that survived the volatility and made it to the end line. So good stuff there, and a lot of additional technical analysis. And that's the great thing about this FOMC understanding. We're looking at Bitcoin right now, and everybody's seeing that we've got this bear flag formation here. We've got a ton of resistance and support that when we clone this, the repeating trendline system, really validating now that we've lost this support. And also horizontal levels, really key right now in Bitcoin. It's been bouncing around a lot of horizontal levels, right around this 65K range. And then finally, once we break below this 63K level, that's where the downside starts to maximize. And keep in mind, this Treasury general account refill event in that federal document, this isn't even going yet. It hasn't even started yet. We're just warming up to it, anticipating this huge catastrophic event that's about to happen in April. Of course, we've been waiting for this. Dollar cost averaging into cash, picking up some select swing trades like River. For everybody who's just a subscriber, for the VIP members, we loaded up on Tau, Render, Before that, it was banker bought. And now we're getting ready for absolute rock bottom pricing. Total V-shape downside and recovery, and we're fully clipped up with profits from a bear market. Again, none of this has anything to do with my opinion. This is a teachable, fundamental tactic, method, strategy that can be merged with any other existing tactic, method, or strategy. It's an ultimate enhancer. So this Bitcoin bear flag, downside continuation right into that 50K level. Huge psychological barrier right there. This guy's anticipating 45's deep. In the event it starts to wick down to 45, as you guys know, I've been selling rental property out of state to dollar cost average for this low, but those sales never went through. So I'm going to be missing this out with a huge buy-in, but hopefully they'll delay the upside, the Treasury general account injection into the economy. Hopefully Congress will delay voting on Powell's replacement. Hopefully the Bank of Japan carry trade will hike rates, and this can extend and prolong the downside, preventing a strong rally to the upside. But undoubtedly, there'll be some V-shaped formation. Yes, a lot of traders unaware of the FOMC documents, how powerful that information is, had no idea that this was about to take place. We've been talking about it ever since February 18th, when we started saying, hey, there's going to be an AI rally, and then there's going to be huge downside with the April TGA. Another point to this April rally. So we just talked about how there was consolidation at the February 6th labor market print. Guess what the breakout event was? That's right. It was the March 6th labor market print, which came in drastically low. A lot of times, labor market prints released on a Friday affect the DXY, and they affect the bond market in such a unique way. Labor market prints create the most fake outs across crypto, and we definitely saw a clear example of that with the March 6th labor market. Of course, our sliding scale, which removes emotions from trading, right? By setting up a sliding scale before this comes out, we're able to recognize in the event that this comes in below 70, and the unemployment comes down, that's bullish. Of course, it comes in super low. It's minus 92. That's bullish. Clear cooling labor. The rate cut timeline, or in this case, the quantitative easing timeline, is advanced. Treasuries drop. Risk appetite improves, etc. And guess what? The target sectors. Can you guys see this? This is our sliding scale technique. The AI infrastructure. This is what's projected to rally. So we were anticipating a breakout in Tau, Render, these AI projects. Guess when they rocket? Monday morning, right after that labor market print. Boom. Just like our sliding scale technique put together, this is exactly what we did with River, but the catalyst was the FOMC minutes. It was in the event the FOMC minutes talk about Treasury bill repurchasings, RMPs they're called. In the event they're talking about that, this project's going to rocket. And it certainly did. The quantum rumors, that works both ways. So they can use the same quantum technology to protect Bitcoin. Ouch. I just did my taxes for 2025. Caspa, profitable trading throughout the entire year. And we've got most of the trading plans already open. And this isn't my intuition. This isn't some fancy technical analysis or some rumors we heard in a Discord. This is all coming directly from this Fed insight that is the concrete of what moves markets. So we sold out January 28th, and we put that trading plan together on December 10th. Why? Why would we sell our Caspa then? This is the trading plan from December 10th. It's anticipating at the January FOMC meeting, excuse me, because of tariffs, which were inside this FOMC document. I'm going to read it to you right here. This was the clue to sell Caspa. Not from my VIP group, but where I got it. This is how I unloaded on Caspa. Since the election, meaning here comes Trump and all of his tariff policies, as investors assess the implications of incoming inflation data and potential economic policy changes for the near-term economic outlook, communications by Federal Reserve officials contribute to investor perceptions of a slower timeline for policy rate reductions. That's a dot plot vote. Remember, we just had a dot plot vote? They ended up keeping it at 1. Let me show you the history of dot plot votes. Right here, there's high inflation here, consolidation, Gary Gensler's fighting with CZ, etc. On September 17th, it's a quarterly FOMC meeting. What do? They vote on the dot plot and they add 3 rate cuts for the end of 2024. Monstrously bullish. It's on like Donkey Kong and everybody knows it. So we get this breakout, which really extends to the upside at that final one on November, reaching all the way up here. Now up here, they're reevaluating the data. President Trump won the election also. So some things have changed. And they came out with that, meaning at that quarterly report, 4 times a year, they vote on the dot plot. We were just talking about this in some other live streams. Boom. They originally planned not only on those 3 rate cuts, but there was a bunch of rate cuts in Q1 of 2025. That was going to be altcoin season, guys. That was going to take us to a new incredible height. But guess what? They canceled it. And this isn't like some secret information. They're publishing it. Yet somehow all of social media, all of the crypto community, they looked the other way. The next time they vote on the dot plot is here, September again. They had originally planned on a bunch of rate cuts in 2025 and 2026, and they cancel them. But here's the thing. This was a bit trickier of a setup because Powell did 1 rate cut. Remember, everybody's like, here we go. It's alt season. 1 rate cut. That's kind of the head fake. But the dot plot vote, they're schwacking them. They're taking like 3 rate cuts off. So right here, we're selling all of our altcoins. We're selling our Caspa, and our plan is to sit on our hands for 100 to 120 days. Caspa kind of front runs this whole event, really, which is interesting too. Now all the altcoins are down, a lot of them even worse. So we're out of Caspa here. We're back in Caspa here, and then comes the May 15th event. This is one of the bonuses of being in our VIP group. You might understand macroeconomics. You might already be reading the FOMC minutes, watching all the meetings, be hip to PCE inflation, the correlation between tariffs keeping consumer inflation low, but producer inflation high, etc. Durable goods, how the war is going to boost the durable goods print for next month. All of a sudden, Powell comes out of nowhere. So you're going about your business, and you don't notice Powell makes an enormous meeting where they're threatening to change inflation policy. This was super bearish, and we're able to sell our entire portfolio again here. So we were in cash, bought, sold. We bought here. Now, there was also a conflict in Iran here. Now, admittedly, we kind of got faked out. I think it was a durable good print, maybe labor market. We could have done a better job and caught the absolute bottom. Some people were saying, well, it was the Iran attack, which happened right then. We got in a little high here, but we were able to take profit again here. So this definitely wasn't a loss, but the gains could have been bigger. And ever since then, we've been sidelined Caspa because there's this huge inverted cup and handle pattern. And we're seeing the writing on the wall with the Fed quantitative tightening. As long as these graphs are headed to the downside, for store of value projects like Caspa, it's not bullish. So Caspa, one of my profitable coins during 2025, a total bear market, total annihilation, just showing how useful this stuff is. And don't take it to Caspa specifically, the whole market's down. I'm telling you, man, same thing. There's a good chance. Remember, the Treasury general account, when it draws down, that is super bearish. But when they inject that liquidity back into the economy, we got Scott Bessant at the helm, plus all the votes that Congress did, that could be super bullish. Meanwhile, there's a 6-week deadline for Congress to vote on the Clarity Act. That can also be huge. Yeah, just stand strong, brother. Stand strong. It won't be that much longer until the Fed really starts to rotate and we really start to see things getting cooking. We have additional insight on price action inside our VIP group. And since you are such a fanatic of Caspa, you've got a huge allocation into it. I'll go ahead and show you some of our FOMC minute research. Here we've got the keyword search for everybody in VIP, and then at the bottom, we're just starting to build a course on how to correlate that with different sectors and projects, like how we knew Tau, Render, and also River earlier. We're going to rock it. This is going all the way back to that May 15th date. On any chart you've got, from Tau to Caspa, there is massive resistance right at May 15th. See this on Tau? That's May 15th. Tries to pass it once, fails. Tries to pass it again, fails, and then downside. Interestingly enough, the macros really aren't supporting us getting back up to that. Caspa, same exact thing. And this was a big part of our trading setup for 2025. For one, we sold that top on the day. That was huge, man. That was big. I remember on the main channel, we were anticipating Caspa was going to go up to 16. And it was on course to do so. Everything was running. Virtuals was ripping to the upside. But then Powell came out and he said, it's over. We're doing this. They're threatening this new inflation policy. Look at virtuals. So we're taking profit here. And I specifically remember there was a VIP guy who sent me an email when it wicked up to like 260 and he was like, oh no, are we going to have to repurchase it at a higher amount? Are you sure this May 15th event is the downside? And now it's as clear as day. That May 15 event where we took everything and put it into cash, rotated out of crypto, just like the institutional investors are doing, became a massive line in the sand, a line in the sand that the Fed's been talking about at the meetings, inside the documents, because they're talking about tariff inflation. And that goes all the way back to that January sellout when Donald Trump first got into the market here, when we were able to sell everything. That was all anticipating tariff inflation. Watch out because of tariffs. Tariffs are going to come. and tariffs are going to crash the market. We're predicting this in 2024. And this tariff inflation, the Fed is anticipating, this is direct quote and a screenshot from a recent FOMC minutes. With the effect of higher tariffs on inflation expected to wane starting around the middle of this year, inflation is anticipated to return to its previous disinflationary trend. Boiling this all down, the Fed's got two types of inflation now. They've got the inflation they created during COVID, and now they've got tariff inflation. To top it off, they've got this oil inflation from the conflict overseas. And this is monitored amongst different metrics in PCE. You've got headline, you've got core. In the ratio between CPI and PPI, and then also durable goods. This was huge for AI when that durable goods print came out right at the market bottom. There was a durable goods print right here, sent everything flying. Remember, they were anticipating getting ready for a huge durable goods print in manufacturing. Why? Because they knew tariffs were going to come in. Have you guys noticed that Apple, they've been giving away all these free phones? Yeah, get a free iPhone 9, etc. Because all these huge corporations stocked up a ton on durable goods way back here during the Russia-Ukraine conflict. As that begins to wind down, there's a lot of different theories on how it's going to impact the economy. Ultimately, the line in the sand for Caspa, getting back to my point, when's your Caspa going to start to go back up? According to the Fed, because remember, I never share my opinion here. This is all based on Fed data. I do diligent research to put this together for you guys, so that you're not just hearing some guy rambling off with like a news article up there and a chart. This is the good stuff. And the Fed's saying, Powell even said at the last meeting, they're thinking that tariff inflation, which is connected to that May 15th date, where we sold everything in our VIP group, and now it's a huge trend line, we're going to get back to then. Notice Powell couldn't even challenge that. But by midsummer, we should be good to go. Now, in order to get the kind of gains that everybody really wants, the COVID lockdown style gains, the Fed needs to start building its long-term balance sheet. Right now, they're just doing soft quantitative easing with the T-bills. We want to see them start doing QE with the long-term bonds, the 10-year, the 2-year. When they build their balance sheet back up to previous all-time highs set during lockdowns, boom. That is going to be when your store of value projects rocket to the upside. Let's take a look at this DXY chart, which is really correlated with QE and QT. And this shows specifically high impact catalysts for your store of value projects like Caspa. Let's go ahead and add that Fed Treasury right onto the Caspa chart. Remember, in 2023, not only were they backing off their quantitative tightening, not only were they slimming down their rate hikes, they had to do an emergency QE because there was about to be a bank run. And that's very similar to what's happening right now. There's an issue in the banks with liquidity. It's getting very trapped up. So through that quantitative easing that they did for 60 days at the Fed, it was Circle Bank and another regional bank in California. They had huge issues. We saw Caspa, that was the biggest, strongest runner, the #1 gainer during quantitative easing. Therefore, our hypothesis was, well, some institutional level investors are interested in Caspa. We checked out the tech, we checked out the team, looked legit, but it was the macros that gave us the insight to get into it. So at that FOMC meeting, we scooped it up down here at the low, and then it's been up and up ever since. The key to this story is store of value is directly correlated with the long-term QE, the Fed's balance sheet. At the exact tip top of the 2021 rally, there's an FOMC meeting right there. Guess what the Fed does? They stop quantitative easing, they stop rate cuts, and they go in the exact opposite direction, a full 180. They usually have a smooth transition period. They start quantitative tightening instantly, right at that November meeting. And then they start hiking rates. So using this tactic strategy, very easy at the prior cycle to have sold at the top of the market. Like we've just shown you how we've done this time in a much more complex, tricky setup. That was as clear as day, like hit you in the nose. If you couldn't have took the profit right then, you don't know money if it hits you in the face. Because you watch this video, now you have a huge edge alone, just from knowing that. This is the intraday impact on the dollar. So we can see right there, that's what we were talking about. They start the quantitative tightening, they start the rate hikes right at the top of the last market. And then as it's sliding down, there's that emergency QE injection right there. Look at what it does to the DXY intraday. It slides it down. And then here they said, okay, no more rate hikes. And that was big news for crypto because no bad news was becoming good news. And this was all along this consolidation here. Really, they didn't flip bullish, but because they printed so much here and they just started slowing everything down. I want to get the mouse out of the way so you can really see that. But right here at the bottom of this valley, that's when they're slowing down their policy. Kind of making everything, well, we're not going to be super hawkish. And that was enough. That was enough, plus that 60 days of QE. By 2028, that's when, from all the money printing they did during lockdowns, inflation will finally be fixed. This is why inside any financial education seminar, I've taken plenty of them. They have them in Vegas. They're typically for the stock market. The first thing they teach you is you're going to get a once in a lifetime setup to make big money going long every 10 years. And finding those moments is key. And yes, we have one right now. Obviously, COVID was huge, but the Fed is getting ready with the help of tariffs to start unleashing their quantitative easing in this global liquidity cycle. This is exactly what Satoshi mapped Bitcoin out. All these theories that, oh, Satoshi's a supercomputer nerd, and they need to correlate who Satoshi is with someone with a deep understanding of the central bank. A team, perhaps, correlated with Alan Greenspan, who worked on a project similar to Bitcoin with Apple, a digital accounting type of ledger. Because what they did was that 4-year halving cycle is working hand in foot with the Fed. Super interesting stuff. Yeah, just stand strong, brother. Just hang tight. Just continue to dollar cost average too. We're in for a haul. Caspa is a store of value project like we just went over. On top of that, there's a ton of on-chain upgrades. The huge pivot that's taking place right now is the tokenization of stocks. As somebody who tracks every single new listing every day, it's part of the daily routine. I'm seeing tons of Rivian, the second strongest electric car company, only under Tesla. All these tokenized stocks are getting listed right now because there's going to be a huge pivot. The new Gary Gensler, Paul Paul Atkins, I want to say his name is. Interesting that we can remember the villains. He's saying in 2 years, everything that's traded on an index in the stock market, it's all going to be tokenized. And that means it's going to be running 24/7. Caspa, remember the KII, their whole game plan before this tokenizing stocks even happened, they wanted to tokenize the energy commodities in Europe. The bonus there is, let's say you're Iran and you want to trade your tokenized oil. The United States, and they've done this to Russia, they can go in and stop you if you're a global threat through the exchanges, through the validator nodes. On Ethereum, they can stop you. They can on Caspa because it's decentralized. So there's some value there for governments worldwide. So don't underrate the technology and the big use case. I can see some disbelievers on the Caspa theory, but remember, we do have the most accurate setup of take profit signals that the entire market ignored using this method. Not only that, just recently, just over Q1 alone, we've been able to use this exact same technique that got us out at the market top, got us out on May 15th, warned us of up and coming downside here before the Morgan Stanley injection. We were able to put together swing trading plans for River, BankerBot, and of course, Tau and Render at the low. That ship's already sailed. For traders who didn't get in on Tau, who thought it was going to drop down to 50, 75, 100, they've now missed out. And all of that information, this doesn't take a wild imagination to put together. It's written in federal documents. And there's one getting released very soon. So we want to be up to snuff on that. Similar to BankerBot is Clanker, which has been having a lot of on-chain data signaling growth. Pulling up the TokenBot wallets on BaseScan, you guys all heard about how they just did a expansion onto BNB chain. So they're a base AI agent that was part of the invention of X402 wallets. This is a huge pivot for AI agents. Wallet number 2, wallet number 4, and wallet number 5. They all took liquidity off Coinbase, and it all started 27 days ago. They just took some more off 3 hours ago, guys. This is something that we track. Any of our target projects, we're always tracking the wallets, key wallets, top wallets, how many wallets in general, looking for insight. Look at what just happened 3 hours ago. They just took another 2,000 clankers off Coinbase. Now, we've all heard this motto: take your Caspa off the exchange, because it can force the market makers into purchasing it, generating more violent upside. We've all heard of the X402 upside. It's almost unbelievable how many of these breakout projects we've been able to find using this FOMC insight. Of course, we go on to cookie.fun, and the rabbit hole goes a bit deeper than just reading the FOMC minutes, obviously. Siren we did not get, although we did get River, which had an equal size breakout for the full 30x rip We got BankerBot, which is one of the reasons why we believe Clanker's up for a pivot. BankerBot, and what's that other project that's running super strong? VVV. Now, there's a difference between how VVV is and BankerBot is structured when you compare it to Clanker. The difference is clear. They charge a fee every month, which aligns them more with MSCI regulation. They want business models that just use the blockchain to enhance. They're trying to force that pivot in crypto. So the institutional level investors, very interested in these pay-per-month models. Clanker has a very limited supply. They've only got 1 million tokens. And as we just showed, Wallet 2, Wallet 4, and Wallet 5 over the past 30 days have been absorbing Coinbase's holdings in an attempt to trigger an upside. Now, going back to the top performing projects, obviously we've been able to get trades in on Hyperliquid. That's a no-brainer. Render, Tau, BankerBot. We've been able to capture these using this tactic. Here's another piece of information that people are overlooking. Whenever we get these random breakouts in specifically AI sector, whether it's Siren, VVV, or BankerBot, it's happening with one of these macroeconomic catalysts. The durable goods print, huge connection to AI, deeply entrenched in virtuals. Durable goods stands for robotics and automation. Now, with tariffs coming in, the institutional investors, they knew the durable goods release during our last downside, that was going to be super bullish. And they were able to start front running it. We can see that purple emoji right there. That's durable goods. They're able to front run it. So we're like building up a few days, 72 hours before the print gets released. It's showing amazing growth. And we just get a rocket side. Another thing that helped that durable goods print, that tracks the military budget. So when we've got this conflict overseas, we've got this big durable goods print about to happen. Now, for those of you guys who've been watching the live streams, remember what we thought the original pivot was going to be. We were saying it was February 18th. Why? We got an FOMC minutes and we got a rescheduled macro event. It was these rescheduled PPI inflations that caused the downside, triggered huge sell-off in January. A durable goods. And that aligns with our AI readouts from those FOMC minutes. Inside of our VIP group, we extracted all the screenshots, all the captions that have to do with artificial intelligence and how the Fed's explaining, yeah, the capex of AI is just rocketing to the upside. That's ultimately what supported our Tau and Render entries. The catalyst eventually being the labor market print on the 6th. There's a huge durable goods, which is known to control the AI price action. We can see the absolute wick top on virtuals here in May. It went past the May 15 inflation right there. Durable goods report. The breakout here and here. Durable goods report. It's automation and robotics. It's AI. BankerBot, we timed the breakout with a durable goods report. Now, unlike River, where we had half a dozen trading plans for this, really trying to flag the guys down like this is a high conviction trade, BankerBot, we had one post up. And it was based on going through cookie.fun. This is where all the AI agent data is. Going beyond that, back to why Clanker's ready to rip. We've all seen this X402 technology, Pay AI, an example of it. It's an entire category in crypto rank. This technology was released via Clanker and Coinbase. The Clanker team Farcaster. They built Coinbase with Brian Armstrong back in the day. So huge connection with this X402. For anyone who hasn't heard about that yet, the AI agent phenomenon everybody's been hearing about. People think, oh, that must be Virtuals. Virtuals is just a chat bot. Virtuals can't execute a trade on a wallet. Clanker can. And so can these AI agent picks. So when you're doing an open claw project, there's a tornado in Florida, we got to send a bunch of bottled waters. Virtuals can't get it done. Everybody will dehydrate before that happens. A human being can't get it done, but an AI agent can. An AI agent can go get the truck, map the route, make the payment, get the driver, set it all up, bada boom. So this is a huge pivot. So looking forward to breakout on this. Oh yeah, back to the thesis of the breakout. So originally we thought it was going to be February 18th. They did a schedule change, just like with PPI. So when the minutes is getting released, also the durable goods is. When that durable goods print came out, there was a glaring issue with it, that being all the numbers didn't align. So people that watch these videos, they think, oh, I can do this on my own. I just need to look at PCA and see if it goes up or down. It's a lot more complex than that. With durable goods, we need to make sure both the transportation and the defense numbers are aligning. And what we got on the last print, which was on February 18th, was not that. One of them showed massive growth. One of them showed crisis mode downside. With the conflict expanding overseas, we're looking for parallel metrics that both support each other. Growth. This can be huge. And definitely, this durable goods here, where everybody was overstocking, this is why Apple's giving away those free cell phones. That's durable goods 101, because they had to overstock here. The institutional investors were front running this breakout, and this hits all of crypto, guys. It'll hit AI the hardest, but it hits all of crypto. Let's get the durable goods on here on the total 3 chart. Yeah. See how much they front ran that? So there's the Treasury general account injection. And then here, durable goods, they're front running it. There's 3 candles, boom, 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 before it even gets out. Two points to answering this question. I appreciate the super chat. Point number 1. We always focus on dates. When is the low going to be in? When is the peak going to be in? Because this is a much easier metric to determine with a high level of accuracy. Looking back at these Chad level callouts throughout our Caspa history, I just did my taxes for Caspa throughout 2025. Despite it being a bear market for all of crypto, specifically Caspa came out profitable. Using these FOMC documents, we're able to locate when the top and when the bottom is going to be in with a far more greater accuracy than we can. Well, how high is it going to go, or how low is it going to go? Make sense? Here, we're able to time exactly. This document came out in December 10th talking about tariffs, the Bank of Japan rate hike, and that's going to come into our Caspa projections right now. That was all scheduled in stone. The Bank of Japan was hiking rates on January 28th, plus the Fed is going into, as we went here, all of these rate cut policy shifts. Again, none of this stuff comes from my opinion or my experience as a trader. All of our projections, I take tons of time to pull federal data out and then build the structure that is showing us. So just as an example, back when that downside was happening, we knew for 45 days in advance, because of this FOMC document, because of the US election, because of the incoming inflation, there's going to be policy reductions. Add a Bank of Japan carry trade onto that, and we're able to pinpoint exactly when. We don't know exactly how high the altcoin market's going to go, but we know when it's going to drop. Now, using technical analysis, we can get an average, undoubtedly, like we've done with Solana and Bitcoin. With Solana, the average downside from a head and shoulder, that's minus 70%. With Bitcoin, the average downside takes us to 50K. It's minus 70%. Looking at Caspa, let's get this Fed chart out of the way. We've got a giant inverted cup and handle. And I believe I have this drawn out. Oh, here's the Bank of Japan carry trades. So here's a wild card factor for April. So we've got the Treasury general account refill. And this is a double-sided sword. One, you've got the refill taking liquidity out of the system. Two, Scott Bessant then stimulates the economy. And it's definitely heavy crypto, heavy AI with the AI capex. These TGA refills make a liquidity crisis that's bearish for all, specifically Caspa. So we got one of these coming up on April 8th. That should be the V point. That should be when everything bends. Now they can delay it because of the conflict overseas, extending the liquidity crisis, extending the downside date. Because this is an inverted cup and handle, the average downside on an inverted cup and handle is 2 cents. So right around that 2-cent range. Now we've already seen a wick down here. Let's get to the MEXC. This is the highest volume chart. Zoom in on the past 2 hours. We've already seen a wick down to 2.5 cents. When that low will take place, there is an entire sliding scale on, which I'll build out for you right now. In the most bullish event, Congress votes Powell out because they still haven't voted on his replacement, which can become a catalyst. In the event Powell stays in there for longer than we're anticipating, that's not particularly bullish for the crypto market. They definitely want to get a new Fed chair in there who's going to use different policy. This is our repeating trendline system. We've had this set up on Caspa's chart ever since November in different videos. It's fairly helpful for showing when resistance is. And we've used this historically to help with our macro insight. Just to pull up an example, we can see this chart right here. We're lining up that repeating trend line. Just like Tau, and with that Tau trade, you get repeating trend lines on Caspa. But that's another thing. Let's get back to this question. Going sideways at this range, the Bank of Japan carry trade, that's April 28th. That can be resistance at 4 cents. That can cause downside. Remember, the Bank of Japan carry trade has been extremely bearish for Caspa, opening up 2 charts so we can go back and forth between the two. Why is the Bank of Japan carry trade have such a high impact on Caspa? We can see, while the rest of the altcoin market was crashing, remember they consolidated for an extended period of time, Caspa kept rocketing up. Now that's also part of why it was the #1 performer way back here when they did quantitative easing. Institutional investors can take that liquidity from the 2023 quantitative easing, roll it into Japan, and extend it. This is super popular. It's an entire concept in investing. We did a video on it. You can research this, and there'll be hundreds of creators that explain the Bank of Japan carry trade. Caspa undoubtedly, unequivocally was part of a Bank of Japan carry trade by institutional level investors. They took that long-term bond money and they made it go longer, leveraging against the yen. Exactly here was Caspa's top, a Bank of Japan carry trade. Like I just showed you in all those call outs, we were able to say, look out, we've got a Bank of Japan carry trade coming up on January 28th. We know we want to get out then because it's going to crash. And then it's been Treasury general account refills. The date on a Caspa bottom coming in the most bullish event will be the April 8th FOMC minutes. In the event they delay the Treasury general account injection, keeping the liquidity crisis ongoing, and then the Bank of Japan hikes rates on April 28th, that will be the date. So there's two dates that are very clear cut. April 7th, a Wednesday, or April 28th, in the event the Bank of Japan hikes rates. The Treasury general account refill is a high volatile, has extreme volatility with it. Price action's definitely going to rip to the downside. Therefore, that's a great time to be dollar cost averaging into Caspa. Can it get all the way down to 1 cent like there's tons of people talking about? Mainly one guy, actually. No. We've had this good rally as protection, as exit liquidity before that event even took place. This buffer is going to really help out a lot when the Treasury general account refill happens. I think 2.5 cents, we might wick down to 2 at the most, will be solid. Why? What's the big picture on top of all this macroeconomics in the near term? The big picture is BlackRock, State Street, Marathon Digital, and all the institutional investors that own Marathon Digital Mining, they bought Caspa. The market makers who set the bid-ask spread, they bought Caspa. They set the bid-ask spread. This is something that Arthur Hayes gets into in recent interviews, something that we covered in detail inside VIP. The market makers aren't going to let a top 100 project like Caspa fall below the level they purchased it on. They're setting the bid-ask spread. They can completely hold it in position. So right now we're getting a lot of support from these FOMC minutes, this whole range here. I mean, in the worst case scenario, okay, let's say that they don't do a Treasury general account injection and they just keep the liquidity crisis outstanding. The Bank of Japan hikes rates and Congress doesn't vote Powell's replacement in. We're just going back to the bottom of the cup. That would be the worst case. But in the event it goes down there, it would just be a wick. There's way too many buyers at the institutional level. With the market makers, they have to support their positions. So hopefully that provided some insight to your broad trading style. Seeker phone. Okay, so there was a huge social media explosion around HNT during the last bull run. Crypto John used to talk about HNT all the time. It was like a minor craze. Because I'm in this tower, I was mining HNT out on my balcony. You set up an antenna and you get a ton of coins in. And this chart doesn't know justice because they changed it, switched it around after there was some restructuring financially. This was a top 30 project. It was a big deal. It's the first decentralized cell phone network. One of the things we do to get insight inside our VIP group is, as you guys know, the Sunday DXY. Every time they reopen the market on Sunday, it gives us a peek into what the institutional level traders are doing. What's going on really that institutional level. What I'm trying to pull up here is their network because it's unbelievable. The Helium network. Wait till you see this, guys. This is completely wild. Yeah, so this is a map of the world, and you can zoom in anywhere you want, and all of these dots, and this is like all over Indochina and Europe too. This is the world's biggest wireless network, guys. It's huge. It's in Australia, New Zealand, all over the United States, and there was definitely one right on the Vegas Strip. Tons of them in Vegas. So this was like a popular plug-and-play miner. Here's what's happening beneath the surface. You guys may or may not have seen that new Coinbase listing, Seeker. It's this new cell phone. What's been going on with Helium since the last cycle is they're like, great, you guys built this huge network, but it doesn't do anything. Seeker is the cell phone that's going on the Helium network. And every Sunday at 3 p.m. Vegas time, when the DXY reopens, you'll see a ton of activity on HNT. That's when the institutional investors reload their bag. They buy the low. So there could be something going on with the Helium network or with the Seeker hardware phone that's going to run on it. It changes and pivots in real time. That's why we track all of the FOMC data. We have some pretty solid concrete projections like the one we just pulled up for inflation based on the FOMC minutes. But as this data comes out, these models are constantly adjusting. Remember how we were just talking about all the Apple cell phones? That durable goods and the inflation from it, that can completely put a new spin on how the Fed's digesting tariff inflations. This FOMC summary right here, not the artificial intelligence one, but just from February 18th, talking about inflation, and at Powell's recent meeting, he's saying inflation from tariffs, we're not talking about the COVID money printing inflation. Inflation from tariffs will be done by the middle of the year. That means that May 15th level where we sold our entire bag inside VIP, and it's on every chart, we're going to go back up to then. Back up to that May 15th level, excuse me. Now, the speed that it takes to do that, let's say we finally defeat tariff inflation in late summer, like Powell and these documents are saying. Remember, none of this stuff that I'm telling you guys is my opinion. This takes tons of time digging into these FOMC documents, pulling the insight out, and then correlating it to crypto assets. So we got the screenshots right here because this is really important stuff. When that tariff inflation is finally surpassed, we'll get back to the May 15th level. And that's across multiple different charts. Tau, virtuals, you name it. There's May 15th on Tau, 450. Then we can start conquering long-term inflation. Caspa, the most clear Caspa projection that I can give you using all this macro data is late summer, when that tariff inflation is finally conquered. Caspa will begin its rally back to the May 15th trend line. Now, whether it flips it into support, it's already rallied up there in anticipation. So the breakout starts the summer once inflation data is really winding down. That's to be determined as the macros come out. But rock solid prediction based on FOMC stuff, not my opinion. They're saying we're going to 12 cents around late summer. This could be the bull run of 2026. Everybody's like, well, when the politicians are going to be voted on in the fall, that's when they'll kickstart the bull run. Okay, fair. Using that example into this macroeconomic hybrid projection, Caspa will rally to 12 cents this fall. And you can really gauge how high the altcoin market's going to go based on that May 15th trend line. So we've got all those quotes from Powell. He was saying that at the meeting too. So it's not just in the documents, it's also in the meeting. And then to bring up some of that May 15th information inside our new member fast track, just to get everybody up to speed on what we do and how we do it. Spotting market tops using Fed policy. We just pull up a history of some of our Chad callouts, where we're selling the top, how we did it, etc. And we can see right here, right on May 15th, we've got multiple posts like, look out, things just got bearish. And we're de-risking out of our bag right in the morning. This is one of the reasons why it's important to have people watching your back with this. You never know what information that's going to be crucial. That's going to be market shaping, like the May 15th event is going to pop out of nowhere, because this came out of nowhere. Powell's speech is bearish right on May 15th. So we de-risk right there, and it eventually becomes this huge resistance and now a talking point. So go for 12 cents on Caspa. Once they defeat the COVID printing inflation in 2028 as a store of value project paired with some on-chain growth, Caspa will be ready to make its dream run, the gains that we're really looking for. This is one key point about the Caspa keyword. Everybody started jumping on it when it was performing well. Way back in the day, the original guys talking about it was Crypto Galaxy, a meme coin trader. Crypto John, who has a bigger channel at the time and was really coming up with almost identical picks as Crypto Galaxy and some other big renowned traders, and myself. We're the only channel that had our own reasoning why. Again, with that quantitative easing for 30 days, we're like, yo, something's going on with Caspa. There's some big dogs around this project. The Peach Fuzz Mafia, all these 21-year-old kids coming out of their parents' basement trying to teach people how to trade. It's like, dude, it takes a decade to get familiar with this stuff, even with AI, which can teach us economics at a rapid rate. It still requires a lot of experience. So we're going after the Peach Fuzz Mafia, particularly when we short sold Caspa at the September 15th rate cut because of the Bank of Japan carry trade. And that's coming into effect potentially on April 28th. So we're just rampaging these guys, doing tons of videos, just proving them completely wrong. And Crypto John, we targeted, and then the whole Caspa community went after him. And then he's like, I hate Caspa, and I'm deleting my Twitter, because everybody was just trolling him so hard. In my opinion, Some creators like John have pivoted away from Caspa because they don't want to get into an accuracy measuring contest with this trading style, because you're not going to beat it. Like I just said, in 2025, despite a super bearish market, my Caspa trading, profitable. Almost unbelievable, but true. And we just outlined those trading plans and how we did it using macro data. Hopefully we can grow the channel to go after these guys with fancy editors, House of Crypto, No BS Crypto, and really start to open the market up and deliver a greater level of understanding. And I thank you guys for subscribing, hitting thumbs up to help us along on that journey. All right, guys, that just about wraps it up. Thanks for checking out this video. We'll catch you on the next one. We've got links to the VIP, including how to vet the next FOMC minutes, where we'll be tracking this data to figure out, is the Treasury general account ready to pivot to the upside, the downside, or what? And again, I'll leave you this document by Milk Road and one by Author Hayes that's just really explaining how important the Treasury general account is and how it can impact crypto. So huge event, big liquidity restoration. And like we said, they overstocked on liquidity. So there could be a big pivot here, guys. And I know a lot of people don't believe that, but after the downside, we're in a much stronger position to start consolidating and then eventually breaking out. Super reasonable price to get into our trading group. It's 47 bucks. We got all this information, and then we are correlating it into trading plans. Again, from the FOMC Insight. Another document released in just a week. So great time to join. Thanks for checking this one out, guys. We'll catch you on the next one.
Flawless victory.